A Ponzi scheme is playing out in the AI space right now. Check this out. On the 25th of September, CoreWeave signs a $6.3 billion deal with OpenAI, bringing their total contract together to $22.3 billion since March. Follow me here. A week before, CoreWeave signs a $6.3 billion deal with Nvidia, who says that they will buy up any unused compute space that they don't sell, which sent the stock booming. But you dig a little deeper and you understand that Nvidia owns a 7% or more stake in both OpenAI and CoreWeave. In fact, Nvidia invested into CoreWeave back in March of 2023. And as far as OpenAI, Nvidia is investing $100 billion into OpenAI, who is required to buy their chips. So wait, Nvidia gives money to OpenAI, who gives money to CoreWeave, who gives money back to OpenAI, who gives money back to Nvidia, who gives money to CoreWeave, who gives money to Nvidia. Smells like a Ponzi scheme to me. They're raising money from investors in public markets and through the bond markets. And they're striking circular revenue agreements and partnerships with people who have to buy their chips. And this is all being funded with either our money or debt, as tech bond issuance is set to cross $200 billion this year, the highest number ever. Looks like a bubble waiting to pop to me. And what happens when the market's correct? What happens when there isn't demand to sustain these infrastructure investments into AI? But this is exactly what people are saying about MicroStrategy and Bitcoin Treasury companies. They're calling them Ponzi schemes.
A situation where past investors are paid money, paid return from proceeds of new investors' money. And that's all it really is. And so what I'm referring to isn't the NAV. The NAV isn't a Ponzi scheme. A ETF isn't a Ponzi scheme. You take the money from investors, you go buy the asset, all good, no Ponzi. What is a Ponzi is when you have interest that you're paying and have no income to cover that interest. Literally no income. That's why I also asked, when's the income coming from? That's not appreciation. So there is no hope. Again, this is why I said, what's the future income of the Treasury company? There is no hope of paying the preferred dividends without new proceeds from issuance. And that's a Ponzi scheme. That's it. There's no way, two ways about it.
Today, we're going to talk about potential Ponzi schemes that are playing out in the AI space and the Bitcoin space. What are the similarities? What are the differences? And which bubble will pop first? This is Dante Cook with Bitcoin Simply. Let's go.
Yeah, so this is one of the most impressive cases of fake it till you make it from Silicon Valley. That's a well-worn tradition in Silicon Valley to make big promises and hope that you can fulfill them. And that's what OpenAI is doing here. Again, as a baseline, a company that's going to have $12 billion of revenue this year, lose tens of billions of dollars, and is making commitments that they, by their count, are now $500 billion, $500 billion. The likelihood that they'll be able to live up to those commitments is quite low, which is to say it's not zero. ChatGPT does have a head start. It's very popular. It's very useful, but they're betting that they can make all these compute commitments, secure that compute, and that will somehow crowd their competitors. Not sure that necessarily can be the case, since their competitors are Google and Meta and Anthropic, which is backed by Amazon, and Elon Musk's xAI, also very well-funded enterprises, while on the other hand, OpenAI now needs to go raise this $500 billion that they've promised, and that's not trivial. Again, they may be able to do it, but for now, it just looks like a fake it till you make it situation.
Fake it till you make it. Sounds like a Ponzi scheme is playing out in the public space right in front of us. And CoreWeave is the poster child. CoreWeave is ballooned to a $60 billion market cap on hopes and dreams, commitments, future contracts, partnerships, and debt far exceeding their real revenues. CoreWeave CEO Michael Intrater has ridden the AI wave in this Ponzi scheme to a personal $6.7 billion worth of wealth. Publicly traded companies are quietly taking on more debt and more leverage to acquire this scarce AI infrastructure. Companies like Oracle have a 550% debt to equity ratio, with companies like Apple and IBM at 200 to 250% not far behind. Don't worry, you and me have the funds to pay for it. We're going to be able to sustain demand for this from now until infinity. Or maybe we won't.
You were talking about the CapEx and the data centers. You obviously see something on the other side of that will warrant that being worth it. But I'm wondering, do you ascribe to these bubble fears at all that people are talking about, that we're in this massive overspending, getting ahead of the skis bubble, and maybe a company like Meta will be okay because you guys do have a core business that makes a lot of money, but
Yeah.
how do you think about this bubble talk that has been going on for the last few months, especially?
I mean, I think it's quite possible. I mean, I think if you look at most other major infrastructure build-ups in history, whether it's railroads or fiber for the internet, in the dot-com bubble, these things were all chasing something that ended up being fundamentally very valuable. In most cases, it ended up being even more valuable than the people who were kind of pushing the bubble thought it was going to be.
Right.
But in at least all of these past cases, the infrastructure gets built out, people take on too much debt, and then you hit some blip, whether it's some macroeconomic thing, or maybe you just have like a couple of years where the demand for the product doesn't quite materialize. And then a lot of the companies end up going out of business. And then the assets get distressed, and then it's a great opportunity to go buy more. So I think that it's obviously impossible to predict what will happen here. There are compelling arguments for why AI could be an outlier, and basically just if the models keep on growing in capability year over year and demand keeps growing, then maybe there is no collapse or something. But I do think that there's definitely a possibility, at least empirically based on past large infrastructure build-outs and how they led to bubbles, that something like that would happen here.
We've seen this before. There's a fundamental issue in the business model. These labs will spend $100 million back in 2023 in order to train these AI models, and they charge $20 a month. But now the cost to train the same models costs $1 billion, tens of billions of dollars, and yet the cost stays at $20 a month. Yet they can't increase the cost from $20 a month to $50 a month because the demand won't be able to sustain it. The people won't be able to pay for that level of compute, even though that's the level of revenue that they need to exceed their costs of buying this infrastructure. There's no way out. You can't increase the cost because your competitors will undercut you. And the cost of this infrastructure and electricity continues to skyrocket. The model is bound to collapse. And the same criticism that's happening for AI is happening to Bitcoin right now. Bitcoin Treasury companies specifically. They're relying on unsuspecting investors, whether in the bond markets or the public markets, in order to give them cash and money to buy Bitcoin in hopes that it will go up forever. The poster child who gets attacked the most in this space, because they created this space as the first Bitcoin Treasury company, is MicroStrategy and their CEO, Michael Saylor. But it's not just MicroStrategy. There are 195 publicly traded Bitcoin companies who hold over 1 million Bitcoin, or almost 5% of the total supply. The leader on that list, MicroStrategy, owns 640,031 Bitcoin, which they acquired for about $47 billion. That's worth about $75 billion. But their business doesn't earn even $1 billion in revenue, not to mention operating profits or cash. And this is what's causing people to call it a Ponzi scheme, like Adam Constant.
Usually it comes with some degree of obfuscation, secrecy, fraudulent assumptions with it. And that's the part I would say, of course, there's not any of that here.
I disagree with that. I think you look at Strategy's most recent marketing document where they talk about their PE and where they talk about their earnings relative to everyone else. That is deceptive. Completely 100% fraudulent. Just because it has recently become GAAP to consider earnings as appreciation of Bitcoin Treasury assets as earnings doesn't mean when you say, hey, I am the biggest earner in the top earner in the S&P 500, that is not a fraudulent statement, because If the market falls, they will be the biggest loser in that quarter in history. And they are marketing it as this one-off mark-to-market. They are marketing to investors as recurring earnings that deserve a multiple. That is fraudulent.
I'm not a shareholder in MicroStrategy, and I do agree that MicroStrategy does not have the business model to sustain the revenues or the income necessary to pay off future payments, dividends, preferred stock owners, and people into the future who are investing into these short or longer duration credit instruments. They need future funds. But the one thing that Andy Constant and people who are calling MicroStrategy and Bitcoin Treasury companies a Ponzi is the fact that they don't realize that Bitcoin is a once-in-a-generation asset, one that you can't create more of. It cannot be replicated, copied, or reproduced.
I think the Bitcoin white paper is one of the most seminal works of computer science in the last 20, 30 years. It's poetry. Beautiful thing about it is there's no one person setting the direction. And there's no one person on the other side that can stop it. So we have something that is pretty organic in nature and very principled in its original design, and the underlying principles behind it that went into it, even to the point of releasing it under a pseudonym. I think that's a very, very powerful statement. The timing of when it was released is powerful. It was a total activist move. I mean, it's moving the world forward in a way that I think is extremely noble and honorable and enables everyone to be part of the story.
This is the thing that's fundamentally misunderstood. And MicroStrategy would be a Ponzi if Bitcoin were in fact going to zero, or a 90% drop from these levels that it would continue to be at forever. And I don't think that's the case. Michael Saylor has a completely different idea for what he's building and why he believes that there are trillions of dollars more coming into digital credit, or these types of instruments that he's building in MicroStrategy and Strike and Strive and Stride. But before we get into his thoughts, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018. They've issued over $9 billion worth of loans, and they've done so with zero losses. Your Bitcoin is held in cold storage and it isn't rehypothecated. And they can prove that they have your Bitcoin because they are one of the first companies to do a digital proof of reserves. When you take out a Ledn loan, well, you don't actually get a credit check, and the funds end up in your account in less than 6 hours on average. Loans start at just 12.4%, but you get 0.25% off by going to the link learn.ledn.io/simply. Get started today with a Bitcoin-backed loan because we never sell our Bitcoin. We want to thank our other sponsor, The Bitcoin Way, the leaders in making sure that you protect your generational Bitcoin wealth the right way. They pair you with a coach, and they have one-on-one sessions with you, family members, loved ones, so that you know how to protect your Bitcoin privately, safely, securely, and confidently. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin.
Joining us now, I'm pleased to say we have Strategy Executive Chairman Michael Saylor. Michael, great to have you with us. This is Bloomberg Television, so we're going to go into all of the financing strategies, but let's talk a little bit first about MicroStrategy's premium to its underlying Bitcoin holdings, the MNAV, if you will. So it's interesting, if you take a look at the past few months, MicroStrategy or strategy shares have actually been underperforming Bitcoin. That has taken your premium down to about 1.4 times, and I would love to hear your perspective on why that dynamic exists. Is it something about the market? Is it the fact that you have all these digital asset treasury companies coming to the fore, or is it something else?
The market's still working to digest a new business model. The Bitcoin Treasury company is an idea that's only come to the forefront in the past year or so. For 300 years or so, the world revolved around gold-backed credit instruments. People issued bonds and credit based on gold. We've discovered the killer app in the Bitcoin world is Bitcoin-backed credit. I'll call it digital credit. In the 20th century, we had bank credit, we had mortgage credit, we've got commercial corporate credit, you've got sovereign credit. Well, digital credit is a new creature, and Bitcoin treasury companies exist to issue digital credit. So the reason there's a premium in the equity is because we can create digital credit instruments. If we were just an ETF, we wouldn't be able to create credit instruments. Mm-hmm. The credit itself is an extraordinary new asset class.
Well, when we talk about the premium, and it's been at lower levels, but you think about the premium coming down, I think it was closer to 2 a couple of months ago. Is that something that concerns you as you look at these different types of financing vehicles that you have?
No, I'm not really concerned. What happens is the premium will expand as our leverage increases and as the volatility in Bitcoin increases. When the volatility falls and our leverage falls, sometimes the premium contracts. But the real key here is the digital credit we're issuing, like Stretch. That represents us stripping away the volatility and the risk from a commodity, from Bitcoin, the digital capital instrument, and then distilling out a particular currency, USD, a particular yield, say 10% on Stretch, and then a certain duration for that yield. And we offer those to the credit market. So we don't really need a premium to issue digital credit. Our business model works fine whether or not the equity trades at a premium or a discount to the underlying Bitcoin. The equity will have value because people understand the value of the credit instruments. And we've launched 4 credit instruments this year, $4 billion product lines, and the year's not even over yet. So that's a lot for the world to digest since they didn't see a new class of credit for 100 years before us.
Like the biggest tech companies in the world are predicting AI will have insatiable demand moving forward, that there will be an unlimited supply of buyers, and that this data center capacity and infrastructure is a fixed asset, that we won't be able to find more and cheaper energy, that somehow we need to build all of these right now at exorbitant costs in order to win in this AI race. Well, in the same way, people believe that Bitcoin is a rare, scarce, desirable asset in cyberspace. Michael Saylor has said this many times. And the difference between Bitcoin and whether we're able to create cheaper, more abundant, and more cost-effective sources of energy is that we can actually create more of Bitcoin. We know that there will only be 21 million. And so the race to start acquiring this scarce, desirable cyberspace asset is now. Both of them have future promises that they need in order to work. AI being that we're going to want AI for everything in our computers and our microwaves and our toasters, and that we will want to pay for this sort of asset for the convenience of having all of our data sucked and siphoned out and used against us in the future. The other promise of Bitcoin is that we're going to need a money that is global, that is digital, that is unconfiscatable, that is out of the reach of central bank governments, that is a fixed supply of 21 million, that is going to have demand from now until infinity, and that everybody has access to. The question is, what future promise do you actually believe in? I'd love to see the debate in the comments. Which one is the Ponzi and which bubble will burst first? Hey, before you go, I want to make sure that you get an opportunity to get hooked up with a 20% off coupon for your tickets if you're going to the largest Bitcoin mining expo in the world at Mining Disrupt from November 11th through November 13th in Dallas, Texas. Use the promo code SimplyBitcoin for 20% off your ticket. Come hang out with the crew, come hang out with the team, and come meet us in real life. What do you think, Ponzi or not? This is Dante Cook with Bitcoin Simply. Happy stacking.